Over the next 11 minutes, I'm going to be showing you the most important company in the United States, and by extension, the most important company in the entire world. And no, this isn't Amazon, Palantir, or Nvidia, because even though these are some of the most important companies in the entire world, they still all rely on one company. And when we look at this diagram, we can see that companies like OpenAI, Anthropic, Netflix, Spotify, Salesforce, and Shopify, all of these companies rely on cloud providers like Google, Amazon, Microsoft. And now these cloud providers, they exclusively rely on companies like Nvidia and AMD to supply their GPUs, because these are the only two companies that are able to produce these high quality GPUs for companies like Google, Amazon, and Microsoft. And when it comes to companies like AMD and Nvidia, these two companies exclusively rely on one company, and that company is Taiwan Semiconductor Manufacturing. And so although TSM is one of the most important companies in the world, because all of these companies rely on TSM to manufacture the chips that AMD and Nvidia sells to Google, Amazon, and Microsoft, there's one massive risk when it comes to TSM, and that's its geopolitical location. Because although Taiwan is an ally to the United States, its geopolitical location puts it in a precarious position, because we all know that China has been eyeing Taiwan for years. And the United States government is also noticing this risk. They're noticing that their most important companies are reliant on a foreign country, and that foreign country is located right next to China. And because of this, the US government recently took on a 10% stake in Intel, making it the first deal of its kind. And this comprised of $8.9 billion in direct investment and a $2.2 billion grant through the CHIPS Act, which brings its total investment to $11 billion. And here's what the CFO of Intel himself said about this deal. Having the US government invested in us and invested in our success is absolutely helpful. And at the end of the day, we're going to have to bring out the processes and execute on the business. But to have their support and backing, I think, is helpful with customers. And so this brings us to my thesis as to why Intel is the most important company in the world. And although Taiwan Semiconductor has been the go-to for companies like AMD and Nvidia, the geopolitical risk that Taiwan poses is making the US government shift their strategies to invest in a more homegrown foundry business, which is exactly what Intel provides. Now, Intel has been one of the worst investments over the last 25 years. I mean, since the year 2000, the stock has been down. Imagine investing in a company for 25 years and being down on your investment. And that's exactly what Intel has done over the last 25 years. But now, instead of competing with companies like AMD and Nvidia, they've been laser focused on competing with TSMC. And that's because the United States literally does not have a company that manufactures chips. All it has is chip designers like AMD and Nvidia. And because of this, Intel sees a massive opportunity when it comes to their foundry segment. But first, let's talk about how Intel's business looks today. So the first segment I want to talk about is basically their CPU segment. So this is the segment that competes directly with AMD. And if you guys will notice, Intel is one of those companies that competes with Nvidia, competes with AMD, and is looking to compete with TSMC. So right now, as of right now, they really do everything when it comes to the semiconductor value chain. But the first segment I want to talk about is the segment that competes with AMD. And as we can see here, since Q2 of 2024, the company has not really grown at all. And in fact, the revenue has decelerated. So from $8.1 billion in Q2 of 2024 of last year to now $7.9 billion in Q2 of this year. So as we can see here, once again, the revenue has been slowly decelerating, but the good news is that this segment is profitable. So in the CPU segment alone, they generated $2.1 billion in operating income. So although it's not growing at all, and although AMD is still beating them out and stealing market share, the good news is that this is a profitable segment. And the second segment I want to talk about, like I said, is that it also competes with Nvidia when it comes to the data center GPUs. And once again, we see that their growth is nothing to write home about. So in Q2 of 2024, they went from $3.8 billion to $3.9 billion in Q2 of 2025. So there really is not much growth at all, especially when you compare it to for example, Nvidia's GPU business, which is literally growing at like 50-60%. So once again, their GPU data center business is nothing to write home about. But once again, the good thing is that it is a profitable segment and profitability is growing by the quarter. But when it comes to investing in Intel, you're really not betting that Intel is going to beat out AMD and beat out Nvidia. What you are betting on is their foundry business, which is the business that is looking to compete with a company like TSMC. But the bad news is that this segment is losing tons of money. And we can see in the most recent quarter that this segment alone burned $3.2 billion in one quarter alone. And in Q3 of 2024, for example, this segment burned $6 billion. And if we annualize that, we can see that they're spending anywhere from $17 to $25 billion in capex per year. But the good news is that they're not just burning this money and letting it go to waste. This money is going straight to their property, plants, and equipment segments, which is essentially their manufacturing hubs. Now, as far as the valuation for a company like Intel, it does get pretty complex. But first, let's start with valuing their first two segments, which is once again their CPU segment that competes with AMD and their data center segment, which competes competes with Nvidia. So as we can see here, their quarterly operating income for the CPU segment was $2.1 billion, and their quarterly operating income for the GPU segment, the data center segment, was $0.6 billion. So you add that up and you get $2.7 billion per quarter of operating income. Now you annualize that, so you multiply that by 4, and you get $10.8 billion in operating income per year. And then if you give that a multiple of 10 times operating income, and the reason why I think 10 is fair is because, look, a company like Intel, like these two segments, they don't deserve a high multiple. They don't deserve 15, they don't deserve 20 because number one, they're losing out to their competition. And we can see that revenue has been flat. So I think 10 is fair. I don't think it's generous, but I also don't think it's aggressive at all. So if we give that a multiple of 10 times operating income, we get to a market cap of $108 billion for only the first two segments. So as far as the first two segments of the company, I think they deserve a valuation of $108 billion today. Now, as far as the foundry business, which is really the hardest business to value because it's nowhere near profitable, and they don't expect it to be profitable until 2027. But what I'm going to do for this segment is use Taiwan Semiconductor as a reference. And we can see that Taiwan Semiconductor in the last 12 months generated $116 billion in revenue, $56 billion in operating income, and around $50 billion in net income. And once again, Intel is assuming that the foundry unit will start being profitable in 2027. And so my assumptions are going to be for 2028. And by 2028, I'm expecting the foundry business to make up 10% of TSM's $50 billion in net income. And so again, by 2028, I'm expecting that Intel will have around 10% of the net income that TSM has today, which would represent $5 billion in net income by 2028. And because this would be a higher quality segment than, let's say, their GPU and their CPU segments, I'm going to give it a multiple of 20 times earnings. Because once again, if this were to succeed, by 2028, it would make Intel the only foundry business in the United States. So I think it deserves, to be honest, even more than a 20 times multiple. But for the sake of being conservative, I'm going to give it a 20 times PE by 2028. Again, $5 billion in net income by 2028, multiplied by a 20 times PE, I get $100 billion in market cap for the foundry segment alone by 2028. And then we add to that the $108 billion we got from the first two CPU and data center segments, and we get $208 billion in market cap by 2028. And today, the market cap of Intel is $125 billion. And so $125 billion in market cap today to $208 billion in market cap in 2028, which is 3 years, would give you a return of 17% per year, which is why I think that Intel stock is actually presenting a pretty compelling opportunity today. Because in my opinion, these assumptions are actually pretty conservative, especially for the foundry business. And I'm also expecting that their CPU and their data center AI segment are not going to be growing at all, which I think, to be fair, are fair assumptions because, they haven't been growing at all for the past 3-4 years. And now if we look at analyst estimates, they're pretty in line with what I expected. So analysts are expecting $2.7 in EPS by 2028. And if we multiply the $2.7 in EPS by 15 times PE in 2028. And the reason why I chose 15 PE is because, once again, I think the CPU and the data center AI segments deserve a 10 times PE, and I think the foundry segment deserves a 20 times PE. And because I'm expecting them to generate almost the same revenue by 2028, I can expect the median PE, so average it between 10 times for the first two segments and 20 times for the foundry segment, then I can expect Intel to be trading at around 15 times PE for the entire company by 2028. And so once again, $2.7 in EPS times 15 PE by 2028, and we get $40 a share by 2028, which would represent 17% returns per year from now until 2028, which means me and analysts are pretty in line with what we think the future of Intel holds. Now, the thing is with Intel is that people have been betting on a turnaround literally since the year 2005. So for the last 20 years, people have been betting on turnarounds because Intel has looked cheap literally for the last 20 years, but the revenues have been going down. They lost to AMD, they lost to Nvidia. They really have not been innovating at all. Like I said, they've lost to all their competition. They're burning a lot of money on this foundry business. But if there's ever a time where I really do think that Intel can turn things around, it's right now. Because number one, like I said, the US government is literally investing. This is not something that is getting a lot of coverage online, probably because the news cycle has been so crazy over the last 2-3 weeks. But this is not something the US government ever does. They don't ever just invest their money in a company and in a publicly traded stock, which, this really goes to show how important Intel is to the US government. And the second reason why I think this may be an inflection point for a company like Intel is because they brought on a new CEO in March of this year. So it's only been, 3-4 months since this new CEO has joined. And it reads here that this CEO, he has served as CEO of Cadence Design Systems from 2009 to 2021, where he led a reinvention of the company, which is literally exactly what we need for a company like Intel. We need a reinvention of the company. We need all eyes on the foundry business, and we need all investment dollars into the foundry business. And so, them bringing on this CEO from Cadence Design Systems is a very good move, because this is exactly what we need. A CEO that has done this before. And it says here, and he drove a cultural transformation centered on customer-centric innovation. And during this time as CEO, Cadence more than doubled its revenue, expanded operating margins, and delivered a stock price appreciation of more than 3,200%. And so this is exactly what you need from a new CEO of Intel. You need a CEO that, number one, has experience in the semiconductor world, and number two, you need a CEO that has experience in transforming a business, because this is exactly what Intel needs. And so even though I don't own Intel stock as of today, it really is at the top of my watch list, because I do think this is one of the most compelling and one of the most interesting speculative bets you can make in 2025. So I hope you guys enjoyed this video. Don't forget to leave a like if you found value, and don't forget to subscribe. Peace.